Discussion coming up for you that's really going to take a close look at the business case associated with IoT deployments. So let's welcome our moderator, Kristin Stants, who's a vice president at KPMG.
This one? Yeah. Good morning, everybody. Welcome to the Investing in IoT, Developing the Business Case and Knowing the Cost panel. How do I change slides here? Aha. So, as was mentioned, I'm a vice president at KPMG Corporate Finance. KPMG is the largest middle market investment bank globally. We do more middle market deals than any other bank on the planet. And we've been spending a lot of time in IoT as a firm. We've closed a number of transactions in the last 2 years in IoT. Just briefly, this is a graph that shows IoT M&A activity for the last 3 years, as well as the largest transaction in each quarter over the last 3 years. I think there's two interesting takeaways from this graph. The first is really that both activity but also the value of transactions has really increased. Between 2014 and 2016, the deal volume, the number of transactions, has gone up about 160%, but the value has gone up 750%. And even if you kind of exclude the Qualcomm NXP transaction and the SoftBank ARM transaction, which were both, over $30 billion, you're still looking at an almost 400% increase in that time period. So valuations are robust, activity is robust. It's certainly a nice time to be a banker in the IoT space. The other thing is this: when I prepared this presentation and had to submit it, the Mobileye deal had yet to be announced, but if I was to update this slide, you would have well over 100 billion in transactions in IoT in the last 12 months. I think the other interesting thing about this slide and about IoT M&A activity that I want to highlight is just the buyer universe. A few years ago, the buyer universe on the deals that we did was more narrowly defined. Now you have a number of not traditional technology businesses that are entering technology. So conveniently, the largest transaction in Q4 2015 was a Control Tech transaction. Delphi acquired Control Tech. We were the banker on that deal. And I think that points to a company that is not a technology company and acquiring a software business in the connected vehicle space. It is not unusual on the transactions that we're working on right now to have a company like Delphi in a buyer universe alongside a company like Apple and Nokia and GE and AT&T, and it's a much broader buyer universe now. So I think briefly that's an update on the M&A markets. Into the meat of the panel here. Just quickly, I want to introduce my panelists here. We have Kiva Allgood. Kiva is a managing director in the new business creation group at GE Ventures. Prior to her time at GE, she spent 8 years with Qualcomm, leading their smart cities and industrial IoT businesses. Next, we have Bob Regan. Bob is a director of new business development at Nokia, and he has over a decade of corporate development experience with Nokia and Alcatel-Lucent. And then lastly, I have Sunder Somasundaram. Sunder is a director in the IoT platforms group at AT&T, and currently he's focused on product management, business development, and strategy in the IoT group. So thank you guys so much for participating today. So I guess to open it up, 2 years ago, I think we'd go to these events and people were defining IoT. I really liked what Mike said. It was a bit of a science project at some companies. I think today we kind of agree IoT is a disruptive technology. It's a big deal. We're all here at this conference. But it's still early. It's still early stages. And what I want to ask you guys is, as you think about IoT M&A and IoT investments, what are the challenges that you're seeing? What are the issues that are consistently coming up as you evaluate these opportunities? Sunder, maybe I'll start with you.
Sure. So today, in addition to product management role, I also work with our AT&T Foundry, which is our innovation centers, where we have a lot of startups that come in at the Foundry in Plano that's dedicated to IoT. And I also work with our strategic investment group in terms of certain deals that we get involved in. Today, what we see from one of the bigger challenges that we see within IoT in itself is, we have things like security companies, platform companies, app dev companies. They're all sort of coming at it from a siloed approach, and they'll solve a specific problem within, for example, security. But that doesn't move the needle for a lot of our customers in terms of, okay, how does that tie into some of the other ecosystem plays, right? Does this, to Mike's point, does this work with AWS, for example? We have companies that come up with their own custom protocols. That's great. They're like, IoT is, still the wild, wild west for standards. So here's our new protocol. But then the question then becomes, how do you then scale that across these different, organizations that we work with, our customers, and make sure that, that is a standard that's going to evolve, right? So I would say the bigger challenges that we see when we meet a lot of these really innovative companies, but they're all too focused on their silos. And I think what we need to see more of is these companies playing in within the larger ecosystem. I'll give you a case in point. We have a service management platform for IoT, as Mike mentioned, that allows you to do things like policy controls. It has an API. What would be great is for somebody to take that API, combine that with a security product, and then sort of tie the whole thing holistically. Then it's a much more appealing product both for AT&T and our customers.
Yeah, I'd have to actually, there was a recent article by McKinsey that said 40% of the value of IoT is not being realized because of the lack of interoperability. So I think when you get a pitch that does one single thing but doesn't tie in, that makes it more difficult, because if you don't have pull-through, it's going to be really hard to scale. So I think the scalability of those solutions is something that we're always looking at.
Yeah, no, I think interoperability is a huge challenge, and certainly a theme that we're hearing as well across the M&A spectrum. I think the next topic that I'd like to explore is, where are you guys placing your bets? There's been some hefty multiples paid by some people in IoT, and it'd be interesting to find out for you guys as investors, what areas you think, are going to be interesting to your companies. Kiva, maybe to start with you, GE bought ServiceMax in January. They paid, I believe, over 10 times for that business. And I'd be curious to know what drove that acquisition sort of thesis, as well as what other areas do you see are interesting right now?
Yeah, I think for GE, we're definitely focused on trying to figure out how do we digitize just about every single workflow we have, especially around the asset. We also made an announcement today around Air Vault, which helps us with the documentation and management of large assets. I think if you think about we produce about a third of the energy, and those products are all in the millions each time you replace them or repair them. So really figuring out the best way to ensure high quality service and management of those assets are definitely areas that we're looking at. But for us, we really focus in on things that align with our business units that help see us either grow, scale within those specific domains. So advanced manufacturing, additive is also one we've invested very heavily. And then we try to tie those together via different projects across the different business units. But what I'd say as a investment philosophy, we typically invest in people and not technology. So if we choose, and one team has the best technology, but the leadership and executive team isn't as good as the team that has the better technology, we still traditionally would bet on the team. In part because it's really hard to have ups and lows and to convince people to take your API and integrate it into their product. That's not an easy sell, because as you mentioned, there's hundreds and hundreds of those out there. So areas definitely tied to our core and being true to who we are. I think Mike said that in the last panel. understanding what your strengths and weaknesses are as a company. We do that as well as a venture team. And then trying to tie that into our investment strategies, I think, has enabled us really to actually, partner with the right folks and make the acquisitions we need to make.
Great. Bob, how about Nokia? What are you guys looking at?
Yeah, I can't speak specifically about specific areas of M&A and interest, but I can say I think anything within our corporate strategy is fair game. Obviously, some areas will be more interesting to us based on the assets we have or the market opportunities that we see. I think for, if I look at IoT platforms, the verticals that we're looking to sell some of the gear and products that we have are around, connected car, smart cities, public safety, and energy. We have an IoT platform that we launched last year, and in terms of the functionality of that platform, in areas that we could look for third parties to either partner with or potential M&A would include, handling the data collection, handling events, and doing the event processing, device management, analytics, application enablement, and security. And I think at least for sort of the IoT platform space, those are the areas that we'd be, looking at third parties for either partnership or M&A.
Sunder, anything?
So yeah, for us, we have 30 million devices today connected to our network. So what we're looking for is really two areas. One, it's something that's really innovative, that is very cohesive and works well with our platforms. That's number one. Number two is really strategic partnerships, like the one that we just announced with GE, right? I think that's a great, very organic partnership where GE provides certain components for IoT that they're really focused on. There's platform connectivity components from AT&T that help tie in really well with the GE offer. So smart cities is a huge area for us, and I think when we look at companies, a lot of them just outright, the pitch is, hey, here's my great product, and here's why AT&T should be looking at it. But the larger component of that is, what's the use cases? Are our customers really going to be interested, right? Beyond AT&T, how do we get some, proof points that this is a solution that has already been scaled at a certain level, and then, with AT&T's distribution, we can just take that 10, 100x better.
Okay. So on to the next topic. We see a lot of hockey stick charts in and around IoT right now. As an investment banker, I make a lot of hockey stick charts, and I'd be curious for the investments that you guys have made. You take them through post-deal closing, whereas I stop at deal closing. Are they panning out as expected? There's a lot of lofty forecasts around IoT, and I'd be curious to see if things are progressing. I know it's early stages, but progressing as you maybe expected. Sunder, I might start with you here. AT&T has a lot of IoT initiatives, so how are you seeing them pan out?
Yeah, so a few years ago, we had a really, really large deal in the home automation space, which turned into AT&T Digital Life. As you guys have seen, now that's available nationwide. We're seeing significant growth in that area. That was one that we were able to completely bring into the AT&T systems, tie that into the other AT&T offers for mobility. Even though it's an IoT play, I think for somebody like AT&T, what's going to help move the needle is taking IoT, combining that with what AT&T is doing in media, what AT&T is doing from a mobility perspective, and really having that sort of network effect, right? That's number one. We also have been big in terms of platforms for the most part. And again, when we looked at, we've been in the platform business now for, I would say, 7 years when things were called M2M. So we did a very strategic deal with Exada back then in terms of taking the Exada platform, distributing that, with some investment, and distributing that, using the AT&T distribution network. But at the same time, when we made that bet, we also knew that AT&T organically, through our foundries, was building IoT platforms that also tied into some of the core assets that we already have. So we had a 3-year deal there, then we transitioned those customers that were built on those platforms into our platforms, AT&T and M2X and Flow Designer. And now what we're seeing is that, and what we're hearing from customers is now taking those platforms and exposing those to ecosystems like AWS and IBM and Microsoft, and making sure that we're managing everything from the device down, security, making sure that across these thousands of devices, the proliferation of standards, we can sort of be the mediator, because for AWS, they expect everything to be MQTT, for example, or HTTP, right? So we want to tie our value add in a very organic fashion to something like the AWS platforms, so that when you go to a customer, they can understand the piece parts that AT&T is bringing and somebody like an AWS is bringing.
Okay.
So what we've seen is the hockey stick only occurs with partnership. So if somebody thinks, if you don't go to the people who are selling into that market at that time, so you're not going into AWS, and
right.
you're not partnering with an ESCO, or you're not finding the person who actually has the channel, and you're trying to do it independently and outside of that, it's very flatline or very minimal growth. It's definitely only seeing the hockey stick when it's via partnerships and collaborations where everybody takes a little bit. So definitely,
right.
You're right on that one.
All right. Well, that leads nicely into my next question. I think we've heard a lot about collaboration today. Mike talked about it on the last panel. Jamalto talked about it. Qualcomm talked about it this morning. What I'm curious about is, obviously there's a lot of partnerships and collaboration going on, between the major companies in the space. But when you look at M&A, there's joint development, there's partnerships, there's minority investment. These are all ways that you can kind of connect with earlier stage companies. And I'd like to discuss how you view those types of tools from an M&A perspective. Bob, I might pass this one over to you because Nokia Growth Partners announced a $350 million fund to invest in IoT. And in addition, I know that you were involved with the Motive acquisition, which is part of what underlies Nokia's Impact platform, and that started as a partnership. So maybe you can talk a little bit to how you guys view these kind of investments and partnerships from an M&A perspective.
Yeah, sure. I mean, all of these are viable options. And in fact, when we look to meet companies, we're really just looking for interesting companies that maybe offer disruptive technology or can disrupt the market, maybe with their channel. How we eventually decide to either partner or do M&A or invest in them is kind of done after the fact, after we've got to know the company. And so we might explore all options, before deciding one or the other. Nokia Growth Partners is, as you mentioned, fully funded by Nokia, and we work closely with them. They're kind of a separate organization in that they take their own decisions for investments. Similarly, in M&A or partnership, those decision-making processes are different, obviously, with different decision makers. But it's true that we collaborate quite regularly. And if you will, we kind of fill each other's funnel. So we share ideas, share companies, introduce one another to potentially companies that could fit either partnership or investment or M&A model more appropriately.
I see you nodding your head. Is it sort of similar with GE Ventures and GE?
Yeah, definitely. It's a collaboration between, I'm on the venture side, so I take the other, but we do partner very closely with the business units, but the investment strategies for each of the portfolios is independent. What I would say, though, is we're starting to see a tighter tie between where we can, strategic intent, and understanding what the business unit's strategic intent is so that we can make the investments that help fill their product portfolio in that 3-5 year time frame. We definitely invest a little further along than early investments, but we definitely look at accelerators like Techstarters in New York and Evo Nexus in San Diego as opportunities to really kind of keep a pulse on what's happening from a technical perspective. And because for us, the technology tends to be agnostic to the business units, so we want to make sure that we're not overlooking or over investing in one area or tech versus another, just because one business unit tends to. So we talk, share the funnel, would you say? Share the funnel? Share the funnel or pass the funnel? I think that's a good way to look at it. So, but strategic intent's the most important.
Okay. And then Sunder, AT&T is a little different. You guys are one of the only large organizations in the space that doesn't have a venture fund dedicated outside of AT&T. Maybe you can talk a little bit about how you guys look at partnerships with earlier stage companies, but then also why you don't have a fund like that?
So yeah, AT&T actually does have a corporate development team that's focused on multiple areas. So they basically look at different aspects of the business, not just IoT. They see what the pull-through is going to be for other aspects of the business. What we're allowed to do from an IoT perspective is, we have a certain amount of funding that we receive every year, and part of that can be allocated for things like inorganic growth. So they allow us to kind of be the tip of the spear in terms of leading. So, within the IoT organization, if we come across a really interesting technology that we believe has great value for IoT, then we can take that back to corporate dev, and they look at it to say, okay, this is great for IoT, but how does that fit in with our tablet strategy, right? So a case and example would be when we go back and say, hey, here's a great fleet company that we think has great technology, but then how do they have the right tie-ins to things like tablets within the cab, right, for the truck drivers to be able to combine that data that they're getting off of the IoT sensors into what AT&T may already be doing in the fleet space from a more traditional tablets, things like that, right? So we're allowed to basically make recommendations on companies that from an IoT perspective really help and will help AT&T IoT, but then we take that back to corporate development, and then they bring in the right resources to do the due diligence and look at it to see how it fits into the broader ecosystem. But we also get to meet with a lot of innovative startups, right? Right within the Foundry, where corp dev does not even get involved in, and these might be really innovative products and solutions that has a lot of value for IoT that we as an IoT group can make a decision to do a strategic investment in them, and then productize that, take that to market, take that to our customers that we believe has value for both us and the customers.
Interesting. So would you say it's sort of fair to say that it's a little bit the reverse? You guys don't have a venture or corp dev team bringing you a lot of ideas. For the most part, the business team is identifying the investments and taking it back to a corp development function? Exactly, yeah. Okay.
So we, and again, like I said, we have a certain amount of funding that even within the IoT group that we can go make strategic investments in, that if we believe that we can productize those, tie that into existing AT&T platforms, and take that to market as a combined platform. And we're doing that in a number of IoT verticals today.
Interesting. I think at this point, I'm just going to open it up to questions if anybody has any questions for the panelists. This gentleman down here. Do we have a mic that we might be able to...
Hello, good morning. Karim Taga from Arthur D. Little. I'm coming from Europe, and I've been hearing the discussion that was very much focused on the region here. Any global perspective you have in terms of partnership globally? What about Asia? What about Europe in your thinking? Thank you for sharing.
No, so that's a great question. One of the focus areas for AT&T IoT specifically this year is global. In fact, we have a go big strategy within AT&T that's really focused on key areas where our customers are located and want us to be able to provide the same services that we provide in the United States in those areas. We're actually allowed now within even the IoT group to contract in 40 plus countries. I don't have the exact list, but so this year we actually created a global team to go focus on areas like Asia Pac, Europe, because when we deploy solutions today within AT&T IoT, I would say across all the deals we're seeing, 50% or more are global in nature, and they want a seamless way to manage their assets, and they're looking to companies like AT&T to manage that across the board. So yes, you'll see a lot more announcements over the next several months in terms of what we're doing specifically to IoT and our global strategy.
I mean, obviously with hundreds of thousands of employees, GE is a global entity, and I'd say a lot of our acquisitions and partnerships and investments have been global in nature and European specifically. But a strong focus, especially on advanced manufacturing in Asia Pac and China specifically for us. A lot of investment and growth there from the standpoint of you can do things a little faster. So definitely we have a regional focus. I'd say from a GE Ventures perspective, we've been investing and have been funded for almost 4 years. And we initially started in the US, but we now have representation in Israel. And we're looking at different funds and investment strategies that help us broaden how we as a venture group invest. But from a business unit perspective, it's a huge part of who we are at GE. So.
Yeah, and similarly with Nokia, obviously a very global company and even European. Yeah, as far as our group goes with the Corp Dev, we have a small team, but we're kind of spread out. We have 2 in the U.S., 1 in Israel, and 2 in Europe. So nothing in APAC just yet, but we do have some representation with Nokia growth partners there.
Just to build on that, because I think that was a good question. We talked a little bit about interoperability, and when you guys are looking at IoT investments, do you find it challenging? Because if you're trying to scale them globally, do you find it challenging if the companies are more regional or they're not, interoperable with technologies across geographies?
Well, definitely from a hardware and connectivity perspective, I like the comments made earlier, especially even with my role at Qualcomm, when somebody would come in and say it only has to be one tech, or only have to have one type of technology to connect. I knew they actually hadn't really tried to do it or hadn't run a project. Because the reality is you've got a lot of things that are already connected, and they are, they could be Zigbee, they could be Bluetooth, they could be Wi-Fi, and getting to that heterogeneity and having a single lens or look, even what Nokia is doing with Wing and some of the other solutions, is super important, especially for the IT managers, because you're essentially saying to an IT manager, now, instead of having thousands of laptops, you're going to have hundreds of thousands of sensors, plus the laptop, plus everything else that can take your network down. And if they don't have visibility into that, there's the IT meets OT reality that tends to be a huge hurdle when you try to operationalize things. So getting to the point where you may not have interoperability 100%, but you have standardization with regard to how you can visualize, collect, and control. That to me is the most important element in order for the majority of the use cases to really be able to work across verticals and work across domains. Especially like if you look at a city, if you only have the transportation data from a small suburb but not the main, then you're not going to be able to impact traffic. Or if you're looking at water that comes from one state, like in California, we get our water from Colorado, but if that data isn't shared with California because it's on a different system, then yet again you don't see the benefit. So interoperability and standardization are super critical in order for any of those solutions to scale.
Do we have any other questions? We'll go over here.
Okay, I appreciate the title is Enterprise. Obviously, the scale is global, but there are much smaller communities out there with much smaller budgets. So I'm in the autism space where the tech need is huge, and we always feel that the party is passing us by. So how does the autism community reach out to enormous players like you with access to such a mind-blowing resources?
Yeah, so I'll start. I think, within the AT&T Foundry today in itself, we have a sort of a startup accelerator program where, we encourage companies to come in, do a fast pitch, focused on what they're doing, what their product is. And I'll give you an example, right? So a couple of weeks ago, we had a company that has this connected, football helmet, and they said, hey, this is gonna read, information about different impacts, and everybody knows concussion is big. And they said, this is a great product. I think we're gonna take it to the NFL, and I think this is gonna be the greatest thing, right? And I think everybody kind of focuses on the product without really testing out the hypothesis in a lot of ways. Because one of the questions that we asked them was, have you even taken this to, some of the schools, like within Texas? Texas is big in football, right? Have you talked to some of those guys to get some early adoption to say, hey, you know what? Everybody in middle school program within Texas has standardized on our helmet because parents are as concerned, if not more, than players about concussions and things like that. What we see is that a lot of these companies sometimes, they don't test their hypothesis fully, and they're all going for the pot of gold at the end of the day. What we look for are companies that have a great product, have a good team, but also have sort of tested out their hypothesis, and they can come back and say, well, here's our data points, here's the proof points, and here's why we think with AT&T we could be taking this to the big leagues.
Yeah, and as far as Nokia goes, I mean, we have kind of an NG Connect program, an IoT community program, where we're trying out new ideas and doing proof of concepts for challenging situations. So, I mean, those would be the right groups to advance ideas to, and we work with a lot of partners to make those proofs of concepts work out. So we might be the infrastructure supplier, but others might, tie it all together and put a system together.
Yeah, I think obviously we have large programs, eco-imagination, healthy imagination, but my advice for a community like yours is there a problem statement you think we can help you solve? And then maybe help you test that hypothesis. Is there a way that for your community with autism that you think technology could play a role, and if so, what is that? And then how could we help you maybe do a hackathon or an innovation around it? There's lots of different platforms and community ways that we could reach, but I think a lot of times formulating that problem statement is the most important and critical element, because I can't answer that question unless I know the problem you're trying to solve. And then I can point you to a whole bunch of different people who might be able to work with you. So really being crystal clear and articulate with regard to how we could help and what is that problem is probably the most important thing that you could do for us to help you.
My mic's not on. There we go. We're going to take a quick break and reconvene here at 11. Let's hear it for our panelists and our moderator.